Hi, everyone. My name is Yulia, and I'm a part of the customer success team. I also have my colleague Anu here to help me out today. Anu,
Hi,
say hi
everyone.
to our audience.
Hi, everybody. Thanks for joining in this session.
Yes, thank you so much for joining us today. Welcome to our live product walkthrough and Q&A session. Today, we will cover a very important topic for all new users, but also for returning users, and that's expenses and how to model them in Snap. And I just want to say that this session will be recorded and made available to you after we're done by the end of today. And so if you need to walk away for a few minutes, or if you want to take more time and reviewing this video carefully, slowly at your own pace, you can always go back and watch the recording. And please feel free to participate throughout the session by submitting your questions. You can do this in the GoToWebinar portal. If you open it up, go to the question mark and then submit your question there. I will be able to see them throughout the session and will address those live. And it will also help me with these questions so we don't miss any. All right, and we still have some attendees coming in, so I'm going to wait just a minute before I jump to the agenda. Okay. I actually think we have everybody who registered so far. That's good. All right. The focus of our session today is expenses. We will talk about how and where to enter them in your projections and what to include or exclude to ensure we don't double count them. I will discuss these things, different things to keep in mind for scenarios with a spouse, and also briefly touch upon some advanced options that are available for you. So let's start. I'm going to quickly switch to Snap. All right, so this is our homepage. And I would like to begin by sharing with you how you can access help when you need it. After you log into Snap, this is what you will see. And on top over here, we have Help button just beside your initials. When you click on it, you will find a drop down with a few options. Help Center will take you to our extensive database of different articles and videos. And you can simply type expenses here to find different articles for relevant to our today's discussion. For quick or urgent questions, you can simply contact us. Just give us a call at this number. It's always on top over here. All right. Okay, let's go back to Snap. I want to also mention that if you prefer to send us a message, you can do it right from this application. A pretty pop-up will appear and you can fill out your subject, just write down your questions, send us a message. It's going to send us an email and we respond within an hour or two on average, so we're pretty quick. Another thing worthy of mention is what's new. This button will show you our release notes, our recent release notes. This is especially useful when you had a break from Snap for a few weeks or months. Because we're continuously working on improving our software, releasing updates frequently, it's important to stay up to date. so you don't have to relearn Snap every time you log in. Well, now that this is out of the way, let's move on with our presentation. For this, I would like to review a scenario for John Snapper. John is actually a sample client that's added to all new users, and I highly advise you to look at his scenario closely the next time you log into Snap. You can learn a lot from it. If you can't find him in your list of clients or you deleted him, send us a message and we will add him again. I will click on the pencil icon over here, and this will take me to scenario setup for John, so I can review him together with you. John is a 59-year-old, a resident of Alberta. He's without a spouse. In the next screen, I see that we're starting his projections in 2024, and that would be the start of 2024. He's retiring in 6 years, as shown by this number here, and this projection is runs until his age 100. For this scenario, we are using FP Canada guidelines for inflation rates and rates of return. I just wanted to add another quick note here. Today, we're still using 2023 FP Canada guidelines. However, we expect to update them by the end of this week to the recently released 2024 FP Canada guidelines. When this happens, for any scenarios that you previously created, you may want to click on this blue button over here, Use Guidelines, and it will update the numbers below to the most recent guidelines. To read more about this feature, simply close on What's This? It will give you a pop-up. It will give you links to different articles, but you can read it later. Moving on to the next screen, expenses. So this is where we're going to spend most of our presentation today. You will notice that this screen focuses on base expenses, as this is a vital number for every financial plan. We think of base expenses as those recurring lifestyle expenses that typically include items like groceries, transportation, and utilities. This field amount over here, it requires an annual amount and not monthly. So be careful in entering it correctly. Most of our users create financial plans from the position of saving, and their clients know how much they save per year, but might struggle to say how much they actually spend. That being said, they may have an idea or a goal for how much they want to spend in retirement. As such, by default, this number over here, we apply it in the first year of retirement and going forward. For John, our client, this number is 54,000, which is why we entered here. Some of you, though, may be inclined to create a plan from the position of spending, which is especially relevant to younger clients. If they have a budget and they actually respect that budget and desire to simply maintain their standard of living in retirement, you can still enter this amount here. However, to apply it to the start of your projections, you will need to make a small adjustment on the planning page, and I will show you how to do it later when we get there.
Yulia, can I intervene and ask you a quick question here?
Yes.
So can you help us understand if what if the client don't know what their goal spending is or what to enter right here?
This is a great question. So you can always start with 0. Like you can put 0 in here, and you can use Snap to come up with a reasonable number on the planning pages. And I will show you exactly how to do it on the planning pages. Just remember that when you use a 0 on the screen, your plan is not yet complete without, because at some point, Snap will think that your client is not spending anything. But when we jump to planning pages, I will show you exactly how to come up to this number. Okay, so it's not fully answered, but we will get there. Thanks, Anu. A few other things I want you to remember about base expenses. I will repeat myself. This is an annual amount after tax in today's dollars. Do not include any other expenses that you plan to enter in other areas of the financial plan, such as additional expenses over here. We will talk about them a little bit later in the presentation, but make sure to not add up these two numbers, okay? You will also have debt payments on other screens. We have insurance premiums on other screens, so you don't have to include them in these base expenses. This is just a net amount that the clients will need in their hands to support their living. When in doubt, hover over these question marks for tips. And you can also go to the help button on top and select instant answers. You will get a pop-up with articles relevant to this particular page. If you look closely, base expenses is right here. And if you click on it, it will give you a video, it will give you the information, very detailed article, amazing article, I highly recommend. I'm going to close this for now. Now, I just want to go through the rest of the plan, but very quickly, so that we get to know John a little bit more. He is, okay, on his incomes, we see that John continues to work for a few more years. We have employment income for him to age 64 because he retires at 65. In assets, over here, we added some investment accounts that he owns. I want to draw your attention to these tabs on top of this table. For example, I see that TFSA for him is rather small for his age. And I will click on TFSA tab, and I would want to correct his TFSA room to account for missing contributions. So I'm just going to add this here. To go back to the list of accounts, we click on the assets. Down below over here, we see that he has a small house. And on the next page, in the debt section, he has a small mortgage still remaining. Now, I want to point out that this is the remaining balance as of the start of this year. And another thing, let's take a look at his benefits quickly to make sure that everything sounds reasonable. His start age is at 65 for CPP and OAS. This is where you would go if your client and wants to delay CPP or start early. The important part of the screen is this feature over here. Sometimes you want to prorate the first year of benefits to client's birthday. The payments will begin the month following the client's birthday. All right. I'm not going through the rest of the pages. I will just go to planning pages now because we covered everything we need for him so far. Now, the planning pages. This is where the magic happens, but there is a lot going on this screen. Lots of rows and columns and numbers. Some of them are blue, some of them are black. It's easy to feel lost at first. And to start making sense of all of this, let's begin with finding our base expenses number of 54,000 that we previously entered for John in the scenario setup. I'm going to look at the expenses column. Okay. Anu, is this small? Do you want me to zoom in? How does it look?
I believe it looks fine. I don't
All
think
right.
we'll need to zoom in, but I could let you know if it doesn't work for
Okay.
us.
Thank you so much. So I'm searching for expenses column, and it's right over here. And I want to make sure that this section has expanded view. This little arrow icon, it toggles between different views. See how the columns collapse into one or split into two. So just play around with these. I want to make sure that this is expanded. I'm looking for base expenses, again, base, and real and nominal. So there are two columns underneath. A real means today's dollars, and nominal is future dollars that account for inflation. And if I scroll a little bit down, here is the number that I was looking for. 54,000 annual base expenses applied in the first year of retirement, highlighted over here, retirement age, and then throughout the rest of the plan. It's in pretty blue, this column. In years before retirement, the amounts in this column look differently. They're black and they're in cursives, you see over here. They are colored differently to indicate that you didn't put them there. Snap calculated these amounts itself based on other entries you made in scenario setup or this page. These amounts signify how much money the client is left with after they receive their income over here, paid their taxes. There is a column for total tax. Made some contributions to their accounts, highlighted with orange over here. It's orange or yellow. Paid the mortgage, and in some cases there will be insurance premiums as well. And Snap calculated for me that in the first year, client is left with $53,000 in his hands, and Snap assumes that this amount is being spent. Review these numbers in this column very carefully when working on your future plans, and make sure that they stay more or less consistent. These years require manual entries elsewhere to remedy any outliers that you might see. And I will go into a little bit more detail just a little bit later. I want to focus right now on this column over here, CFM Start Age. CFM stands for cash flow management. Once you understand the cash flow and SNAP projections, everything else will kind of fall into place. When it is enabled, as indicated by the radio button you see over here, SNAP automatically contributes or withdraws from financial assets to meet this client's base expense goal that you entered, which is why it's very important to not leave your base expenses at $0. Otherwise, SNAP will think that your client is not spending anything and saving everything. Instead, you can review these calculated numbers above and you can round them up and use that as your base expense. Take a look, this 53,783 is pretty close to 54,000 that we actually entered for him, which is good. If we had a different number, we could have used a different number. There is another way, which is super cool, to calculate this number for the client. And it's hidden in this recommendations feature. While I'm not going to talk too much about it, but you will simply need to run a sustainable spending. This question mark will actually take you to the article about it. You will calculate the amount, and instead of zeros, you can apply this recommended amount. And we have many articles and videos about it in the Help Center. You can simply go there and check it out. We might cover it in some future videos as well. But let's discuss our cash flow management and how else it's linked to our base expenses. So by default, we start cash flow management in retirement. I think I said it like 20 times now, but it's very important to remember. It is actually not directly linked to a retirement age. I can change this however I want. If I were to build a plan for John from the position of spending, I would have moved this to the first or second year of retirement, of the plan. Let's take a look around the scenario because my numbers will change slightly. See how it jumped this 54,000 to the second year, of the plan. I moved it to second year because some of our users actually shared an interesting thing with me. They prefer leaving this, moving it to the second year and not the first, because this number over here is a very good sanity check. If there is a drastic difference between these two numbers, this one and this one, it may be an indication of missing information or faulty information from a client or an error in data entry. So it's really good to take a look at it. And a reminder, changing this CFM Start Age does not change the retirement age. Look at this, it's still sitting at 65, highlighted in it, bolded out and underlined. And when I hover over it, it tells me that it's a retirement age. You can change the retirement age in scenario setup general. Okay. Now I'm going to move this back to 65 and run scenario. Don't forget to run scenario every time you see it turn red. Well, you can make multiple changes on the page before running, but just don't forget to run it once you're done. All right. Anna, do we have questions about CFM so far?
Not that is at this point, Julia. But I'll definitely let you know if you have any questions later on.
Okay, thank you.
Thank you.
All right, enough about base expenses for now. I want to chat about additional expenses. If I scroll down this plan, I don't see any warning signs. And I can double check in our recommendations tab the goal status for my client, John. It says overfunded. It means that by spending $54,000 in retirement, he still has enough money to live until 100. So we're not worried about him. But let's pretend that once we presented this plan to John, he got an epiphany. He now wants to buy a boat in retirement and wonders how this purchase will affect him and whether or not he can even afford it. I would go to scenario setup expenses, or I can even click on this title over here. It will take me directly to expenses screen. We can add this. I can't just add this purchase to his base expenses because it's a one-time deal sometime in the future. So I will use additional expenses over here for this. You can use this field for to accentuate special expenses such as travel, renovations, cars, boats, gifts to children, or sponsoring their weddings. You can also use this field, like you can add multiple expenses over here, and you can use them to help your client fix their financial bad habits. If you work with them on a thorough budget and you notice that they spend thousands of dollars on eating out, for example, you can highlight this major expense separately from base expenses to show the client the effect of saving this money versus spending it, or maybe just cutting it down a little. Basically, anything that would require answering the question, how will this expense affect me down the road? You can enter this here. So let's enter this purchase for John. It's a boat. It's $350,000. I'm just making it up as I go. By default, we apply general inflation to this one. And I want to keep it here because I know that John got this number today, but he's retiring at 65. We don't know just how expensive that boat is going to be at 65. So I'm going to let Snap to actually use general inflation and inflate this number for me. I'm putting this from 65 to 65 to make sure that this is just a one-time expense. And I want to highlight this. Highlighting means separating this expense from any others on our charts and in the client reports. What I also want to add is boat maintenance, because boats comes with expenses. You have to store it somewhere. You have to buy gas for it. If it's, I don't know what it is, but I'm just going to put $1,200 per year. And that expense is going to start at 65, and then it's not going away ever. So leave it blank. It's going to be every year. I'm not going to highlight it. I mean, I could have added this to the base expenses amount and just assume that it will increase at that point. But for transparency reasons and my conversation with the client, I want to show these two expenses together. Because without a boat, there would be no boat maintenance. And did I miss anything on the data entry?
I don't think so, Yulia. And I guess putting in a board maintenance is really smart. So thanks for doing that.
Okay, so let's find this expense on the planning pages. Okay, now here in the expenses section, we have a separate column for boat and boat maintenance. And well, if you, again, reminder, if you don't see it right away, if it's just collapsed, just simply toggle this thing and you will see more details appear. I want to scroll to retirement age, 65, and here I see the expense for the boat. And Snap calculated the amount for me. It's no longer 350, it's the amount adjusted for inflation. And same thing with boat maintenance. It's just gonna grow. Now, if we look down the plan, we notice all of these red lines highlighted in pink or red, depending on your screen. And they are indicating that the client runs into shortfall just because of that one purchase. I mean, it's an expensive purchase, but he runs out of money. And we can confirm this by looking back at the recommendations. We have a warning that the goal status is underfunded, and by quite a lot. So let's look at what happened that year closely to make sense of it. All right, so we're back at retirement. So he has this large expense on top of his base expenses. He received some benefits that year, paid some taxes. Let's scroll to his financial assets. Okay, we can see that he fully depletes his TFSA and his non-registered account in order to support himself that year and to buy that boat. So we see these large transactions. You are seeing them because we have automatic cash flow management on for this year. If we had chosen to delay it, let me just move it 1 year down to illustrate this. Snap wouldn't have known what to do about this expense, but it will show you over here a huge negative number. Say that you need to tell me where the client is getting this money to afford this expense. So and if you look at the financial assets, there are no more withdrawals. Waiting for you to manually enter them. Click on the zero and enter a negative number. It can be a huge number. So over here, and I'm going to enter 100,000 over here, run scenario. And Snap highlighted for me what these amounts are and will show you, okay, so that here it's funded and my base expenses, they are reasonable. So I'm gonna keep them there at this. Now, this is where you actually start planning for your client and making your recommendations, like what kind of changes he need to do in order to afford this. And this can be like things like saving more into his TFSA. I'm going to put $8,000 here. $8,000, copy to age 64. I can change this amount, actually base expenses. I can reduce it. I can put 45,000 and let's copy down to the rest of the plan and run scenario and see if it works. Actually, yeah, that worked. But it's let's be real, the boats they come with more expenses, not less. But it's just that any idea you have from that point on, you can use Snap to illustrate it very quickly. Um, all right, so I'm done with these additional expenses for now. I want to show you quickly how they look in the client reports. Do we have questions, Anu?
Nothing so far, but just wanted to remind that this will be recorded as a session. So just had a question regarding that, and you can find it under our product walkthrough article.
Okay, awesome. And I'm going to show at the end of the presentation where exactly to find it.
Perfect. Thanks.
So let's take a look at the third step in our planning, which is client report. All right, so to access these reports by clicking on client report button, we are taken to report editor, and you might have more pages here. You can adjust these pages in the report builder. We're actually going to release a refreshed look of this soon, and there will be more videos on this particular section of Snap projections. So stay tuned and pay attention to our What's New pop-up that appears when you log into Snap. But I want to scroll down to cash outflows chart over here. We can see this huge spike, this blue spike. And this is our purchase of the boat. There is a title boat. It appears here because we chose to highlight that expense. If we didn't, it would have been um, hidden elsewhere, like in other additional expenses over here. We highlighted the boat, we didn't highlight the recurring expenses for the boat. I want to click on this. Let's just exclude the boat, this spike. And we can see that these additional expenses, we can better see them this light blue color. And this is our maintenance expenses for the boats. It's very interactive chart. You can move your mouse over it. It will give you some information, like this is a retirement year, how old John is going to be that year, and what these bars mean. That's pretty much it for the reports and how to view these expenses here and how to exclude them if we need to. All right. Now there's something else that I'm done with John so far, but there's something else I wanted to show you. There are some special comments about scenarios with a spouse and how our expenses page changes when we work with spouses. I'm going to open a different plan that I created specifically for this scenario. See how when I clicked on the name, it took me to the planning pages. But if I go and click on the pencil, it will take me to scenario setup. So I'm going to click on expenses. And there are a few changes that you might not notice right away. But this particular piece, we didn't see the word combined before. For John, when it's only a scenario for him, we only saw the word amount. For couples, we have combined amount. And this indicates that this over here is one number shared between the spouses. It's combined amount. Everybody chips in. On the planning pages, you will see it jumps to James, but you will see an additional tab called combined. And you will see this 85,000 on the combined side as expenses. It might be collapsed for your clients when you first open it, so play around with this until you see it. When you're using combined, you don't have to worry about how this number is split between spouses. Snap does it for you on the background. On the planning pages, you can get additional details on that. So in that year, James is expected to contribute 42,000 towards those expenses, and Jane 43,000. And Snap, sorry, 42,000. And Snap calculates this number based on earnings for the couple and other expenses. All right, and it varies throughout the year when it makes more sense for one spouse to pay more of these and not. If you ever meet a couple who prefer to separate their expenses, you do have an option for that as well. If you go back to the expenses and navigate down here, there's advanced options. There's a warning, so use this carefully. And you can disable automatic allocation of all expenses for this scenario. When you turn it on, the base expenses amount changes to individual amount. So you will need to enter this amount for each spouse separately. Okay? It doesn't have to be equal, but I'm going to return back to combined amount to be safe. So it's, again, the individual amounts there for special circumstances. Most of the households that we're aware of, they tend to just put the money in the same bucket and use it together. As for the additional expenses, for these scenarios with a spouse, you will have an option to set up an expense as a joint. But be aware that Snap will split them 50-50 exactly, as opposed to this number over here. So it will expect both spouses to pay for this expense, and if one of them doesn't have enough money for it, Snap will show it as a shortfall for them only. It will not automatically draw more from the other spouse. Okay, so another cool thing is that for expenses, when you're entering the information here, you have the options to copy expense to the spouse or move the expense to the spouse if you entered it under the wrong one originally. And on Jane's side, for example, there is a gift children, it's a different amount. Okay, on the planning pages, basic additional expenses, they appear just beside the base expenses, nominal over here, but you can't edit them on the individual pages. You have to go to the combined. So they actually follow your settings. If you are using combined amount for base expenses, you can only add additional expenses on the combined page. It doesn't matter if they're joint or not. And if you are using split expenses between spouses, you will only be able to edit any sort of expenses under individual pages. Again, doesn't matter if these expenses are joint or not. Okay. I think this is it for my part of the presentation today. Do we have any more questions, Anu?
No, Yulia, so no questions directly, but I was just curious about one thing. How can we add prorating of our additional expenses if that's something we want to show in the plan?
Oh, yes, of course. Okay, so for example, um, let's add some, okay, from this age to this age, when we hover, we see that this is a gear icon. We can put a particular date in this field when we want to start this expense. But please be aware that the amount over here is the annual amount. So if you're starting this expense in the middle of the year, the first year, this amount will be prorated. Like, for example, something that makes sense, like maybe they start paying rent, okay, at some point. And that is $12,000 per year. And they will start it at 65, but they will move into that apartment in October. Okay, so I'm going to apply this and I'm going to make it as joint. And let's take a look on the planning pages. Combined. And this rent over here, for the first year, it only shows me the prorated amount, $3,000. That's how much I will pay. And for the rest of the years, it will be 12,000. And adjusted for inflation. If I didn't want to use inflation, I would put $0 over here. And let's take a look at the planning pages again. And it's, okay, combined $12,000 even throughout the whole plan. Does this answer your question? Anu?
Yes, Yulia. Sorry, I was just on mute. Yes, yes, that makes sense.
Okay,
Thanks for showing us that.
thank you. All right, I respect that this was a lot of information. So should you want to review this recording, go to help. You can actually type instant questions, and over here is life product walkthrough. And let's type search life support sessions. Well, close. You can click on this life support session. I'm going to click on the title of this to pull it up in a new window. This is where we put our recordings. You can register for future sessions here, but selected recorded session. Now, by the end of the day today, you will have a new entry here for today's presentation. And there will be a video and a summary. So thank you so much for coming to our session today. I'm going to finish the presentation here, and you have an amazing day.
Thank you, Yulia. It was really great for you to walk through everything and focusing on expenses. Thanks everybody for joining in.
Thank you.
Bye.